Hi guys, so welcome to this video. In this video, we're going to be talking about trend line liquidity, right? So trend line liquidity, right? So firstly, before we delve into the meat of the matter, right? I want this video to be as brief as possible, all right? So I want you guys to first of all understand what I mean by liquidity, right? Already, you already know what a trend line is, right? So by now you should know what a trend line is. Trend line is simply a channel, right? A channel like psychological pattern, right? So what do I mean? Typically, a trainer is looking like this. We are typically looking at something like this, right? We see the market in this kind of format, you can see the market bouncing over this imaginary line. Can you see this? This is what we refer to as a trend line, right? So this is what the trend line is. You can see how the market is bouncing off this. So this is what we call a trend line, right? So typically we are told that we should join, you join the points, for a trend line to be valid, you must join at least 2 points, right? So this is it, right? So that's basically what the trend line is, right? It is a retail strategy that so many traders use, right? It's a psychological level in which traders use. So if you are trying to maybe short this market, so you will see someone as price is approaching this trend line, he's putting in his sell position, maybe sell limits at this trend at the base of the trend line. Maybe put his stop loss maybe like few pips away from it, and then he start getting what the new low, right? So this is basically what a trend line strategy simply means. So people that use trend line, they are typically waiting for the market to at least bounce 2 times, and then at the third touch, they're looking for what is sell opportunity, right? Just that this pattern of trading is not consistent, right? Now, I'm not saying that it does not work. When it comes to trading trend lines, it is not consistent, especially when you're trading trend line because of trend line sake, right? So one thing about trading is that there's no holy grail, right? No matter how you trade, you're going to encounter losses. No matter how good you are, no matter how good your strategy is, you're going to have losing transactions, right? So your point of focus is to do what? Is to make your losses as minimal as possible and make your wins as big as possible, right? As maximum or maximal as possible. All right. So now this is what the trend line looks like. They're drawing a line at imaginary levels. So they're drawing the lines from previous highs, and then they project it into the future and they anticipate that price should drop, right? And why those are the counter trend, they'll be like, okay, this is a trend line. They'll be like, okay, as market is approaching the trend line, what do? They put their buy at the trend line area and then maybe put their stop loss. That's not a buy, sorry. They put their long position at the trend line there and anticipate that the price will do what? Will get with activating, all right? So that's basically what the trend line is. Now, when I'm talking about liquidity, liquidity simply means I've given you guys an idea of what liquidity is. Liquidity simply means a place, right, in which a trader would like to put in his trade position. That's what liquidity simply means. So liquidity are areas in the market where liquidity could mean several things, right? From the broker perspective, it could mean something else. But I'm talking from the chart perspective, right? So when you're looking at the chart and I'm saying, okay, this is liquidity, right? Liquidity simply refers to the areas in which the market would draw participants, right? So you're looking at areas in which the market traders or players would want to get involved in a trade, right? So looking at areas like equal highs, flat highs and flat lows, and all of that. We have patterns like head and shoulder. We have cup and handle. All those things are also called liquidity, right? We have previous days high. We have Asian high. We have previous session high. We have previous weekly highs. All of that, right? So we're going to have a playlist that's just dedicated to liquidity. So I'm going to be picking up one by one and then talking about liquidity. All right. So now for this particular video, we're going to start with trend lines, right? So trend line liquidity can be defined as an area in which a trend line trader would want to get involved in the market. And that is simply what trend line liquidity is, right? So now I can project my trend line for the future. Now, okay, let's also do this. So I can project my trend line from now. We'll do, okay, this is the first and second touch, right? I said this is my first and second test, and then I can now project it into the future. So if I project this into the future, I can say I expect price to drop around there. That means when price comes around there, I anticipate a sell. So this is what I call trend line liquidity, right? So if I project my sell limit, I put in a price alert at that point. This is also referred to as what trend line liquidity. So this trend line area now becomes what liquidity, because that is where I would want to get involved in the trade because of what the trend line. So let's make this very clean. Let's make it clean, right? So I'm drawing the sharp highs. You have to do the rejection point. So you can say, okay, if market comes here, then that becomes what my area of what liquidity. Right. Now, my issues with I'm not saying that Trendline don't work. I'm saying that from the smart money perspective, I'm not looking at taking trades at a Trendline because I know that these are areas in which retail traders would want to get involved, and smart money target these areas for um, taking out orders. So most times you see the market do something like this, and then that might bounce off a bit. You know, when it does drop down a bit, it's kind of lures traders to get in, and then you see what this market do this blast through the high. So we're going to identify areas of liquidity from trend line and see how we would have been able to play them, right? So we're going to just pick a random time. Let us pick a random time. So I will not be like I'm looking at the chart. We're going to pick a random time. So let us just run over to. Okay, let's head over here, right? So let's head over here and see how this trend line stuff has been a problem, right? So I'm taking my tool here, just look at this point. All right, so inside there, I'm going to go back to the 2 hour time frame, right? So there will be no much candle, right? So now let's look at how trend lines have been a problem. Now look at this chart. I can see that this market was bearish. So if someone saw this, the person like, okay, let me take my sell positions, right? So be like, okay, let me take my sell. So look at this. We have this. We have this. Right. Okay. This is a two touches. So let's use here. This is a steering point, and this is another steering point. Look what happened. Look very closely. Now, if I was in this particular market, right? Let's take it back here. So if I saw this, right, and I was trying to take this trade for get involved in this particular trade, right? What would I have been likely doing, right? Now, I would, if I was a retail trader, what I would do is I would be putting in my what sell positions here, or maybe waiting for a kind of engulfing candle, kind of rejection here. So most likely putting my selling limit here and waiting for price to come there, right? So when price, start playing around it, later I see this candle, right? If I see, once I see this candle, let's pause that. So later I see this candle, like I see this big candle, what happens? I would be like, okay, I have what an engulfing candle. Look at the candle, look at the candlestick pattern there. So if I saw this engulfing candle now, I'll be like, okay, as an engulfing candle is actually what a reversal pattern if it's a rated concept, right? Now, seeing an engulfing candle at this point would give me, if I was a rated trader, the indication would go short, except that what happened? What happened? Look at this. Okay, so you can see how the market eventually did what? It came to that trend line. What happened? Let's watch this. Watch this carefully. Still playing. Now watch this. Now the market came to that trend line area. Why is this guy still playing? Now the market came back to that trend line area. What happened? It gave you what? That lure. All right, it lured you in to take that sell, right? So let's take a look at this point again. Now, I want you guys to understand this. Now, as markets gave this lure to get in, as a smart money minded individual, this is not of any importance to you, right? So these are let's do this one. So this engulfing candle is not of any importance to you because now this is what trend line liquidity. And as a smart money trader or a smart money minded trader, you should know that retail traders are looking to take off a sell at this portion, and smart money is likely going to take them as a driving price against them. So if they saw this sell, what they do? They put their sell, they'll enter a sell and possibly put their stop loss above this high, right? So they'll be like, okay, if the market is there, you should not go above this high. So likely put their stop loss above this high, maybe a few pips above it, and possibly at this high, or maybe I don't know how they do it because I don't treat that way. So possibly above that particular high by a little fraction, right? right? So now, how should you approach this as a smart money minded trader? So when this happens, you're watching. So you're waiting for a price to take out that trend line. So it means I saw this. It means I saw this, right? I saw price grab. Remember that we are bearish. Yes, we are bearish, right? We are bearish. The market has been what? Breaking lows. See the market breaking lows, breaking lows. So this is a bearish market, right? So now, if as a smart money manager, I would not be using this as a criteria to get involved in my trade, right? Instead, I'm going for a price to do to take that out, giving me what? That's liquidity sweep. So now the trend line liquidity is now what? Violated. So when the trend line liquidity is violated, then I have what? A confluence to do what? To go short. So I can come maybe to the 15 minutes time frame to look for what? My confirmation. And let's see if there was any confirmation on the 15 minutes. Let's watch. So maybe price took out that trend line and broke above it. Did we have a confirmation? Yes, we did. So when price made this swing low and made this swing high, this was a confirmation. Price it broke structure here. So we had a break of structure here. My market broke structure here by closing below this swing below. So if you are trying to catch this sell, right, you would have likely this would have been the best entry for you. Right. I'm not sure you guys how would have made the entry on this. So possibly your entry would have been what maybe at the low of this candle, that's giving you what a breaker block, right? So this would have been a breaker block, this push up. So likely at that point, that would have been your sell position, and maybe if your stop loss above that high. This would have been this is just how many pips is this? This is about 24 pips, and it's very nice. So targeting 24 pips, and if I was selling this, I would be targeting what this low for my target, right? So this would be my target. This remember we are bearish, so this is my target. So from that area entry to this low, what's my IR? That is 1 is to 2.8, right? So let's see what happened if price actually hit it. Let's see. Let's see what happened. All right, let's see. The price was consolidating. Let's see if price eventually hits that take profit. That would have been my original take profit. That's and let's see if price hits it. Good. So that would have been my take profit. Right. So this is how I approach trendline liquidity from a smart money perspective. Right. So you're not trying to get involved when the liquidity or the chart pattern traders are involved in the market. You're using this concept and from the reverse perspective, you anticipate price to take it out. Now, watch closely. We are going deep now. Now, watch closely. And this market was better, but look very carefully. Now, we had what? Another trend line liquidity forming. So we had what? Look at this trend line here. Can you see this? So watch this. They made the first trend line here. Watch. We had the first touch, the second touch, and then it pushed up a bit, right? And then took that. Can you see the inducements there, right? See the inducement. So the trend line, if some people that are just blindly buying this, maybe they were just saying, okay, market is making high. So they are trading lower time frame structure against what the higher time frame bearish. So if you they were buying this first touch, second touch, if you bust this, maybe that cost maybe some few pips, and then what the market would have taken you out. Okay, now if you adjusted this, it's okay. Now, okay, we now have a new trend line. Okay, now what happened? The market would have done what? Induced it by doing what? Look at it. The market would have induced it by doing what? Giving you what? This. Let's take this out. Um, let's take this out. That's article. So now, market would have induced you by doing what? Giving what? This buy, right? We would have seen this. This would have been like a reason to go long, right? Seeing this big rejection candle, so we would have like, okay, the market is going to buy now, and then we would have maybe click their buys, put their buy, maybe put their stop loss maybe below this low. So for those that trade trend line blindly, to have been likely doing what? Doing this, putting their buys maybe here, and then putting their stop loss was below this last low, right? That's likely where they put their stop loss, right? So they'll be like, okay, they'll be like, first touch, second touch, and then third touch, right? They would have likely be buying there with their stop loss below this low, and then what happened? Price took them out. So as a smart money manager trader, you are using this to your advantage. So if you are seeing trend line forming against the trend or against the buyers, you're using that as what? A more reason to get involved, because market is going to drive those retail traders out of the market. So you're looking at trend lines, you're looking at those retail patterns as what? Your reasons for your take profit and your reasons for your entry. So you're framing your bias using this concept, right? If you understand this alone, then you're going to do so amazingly well in your trading. If you can understand this alone, that the market uses retail patterns to draw traders into the market and then take them out before they was going the original intended direction. So this would have been your trade as a smart money that you have been shorting this market and targeting what this is a take profit, all this low, and then this overall low as your overall take profit, right? That is how smart money to that take their trade. So let us play a bit to see what happened next. Let's see what happened next. So market kept selling. So now let's see if there was any other trend line that would have been, taken advantage of, right? So let's watch very clearly. All right, let's watch what the market did. All right, so I can see something there. All right, now let's take a look at this, and this is the final example. Now let's use that trend line example again. Now watch this again. The market came. What do we see here? I think it's the first touch, second touch, and what happened? Can you see? Third touch. So can you see this? This is the first touch, the second touch, and the third touch. What happened? Market was did it reset it? No. Market was blasted above it. Now there are people that trade breakout. So now if as market went above this trend line, some people have like, okay, this is a breakout, right? So people will start to go long on this, right? Some will be like, okay, this is a break of trend line. So they're going to be buying this, and then maybe put their stop loss below this low. And what happened? Did he buy? No. It stalled. Now, when the market was stalling, you can say the market was rejecting at this. What the market was not, the market was inducing traders to get involved in this trade. That's why the market was giving this bullish push. You can see all this push as this trend line area. Well, the market was doing was inducing traders. So that's the market was doing this, right? You can say the market was giving this inducement. So people will see this doji candle, they will see all these candles, and then they'll be thinking that the market wants to buy. And what happened? The market fell off the face of the earth. So now, if you are selling this based on trend line, you have taken a loss. And if you are buying based on trend line, you have also taken a loss. Now, as a smart money trader, what do? You simply do what? As the market takes out this trend line, you go towards the lower time frame. You simply head over towards the lower time frame and look for what your entries, right? Remember you're bearish, right? So now we're looking for entries after price took out that trend line. Now let's see there was an entry here, right? Remember I'm looking for what? I'm not using one entry. I have other entries, but I usually use what the break of structure as my first entry right there. Now let's look at what happened there. All right, so this was the market took out this. So we're waiting for a break of a swing low. So did we get it? Market did not break this low. Right? There was no clear break here, right? It's just wicked above. Then this was it. So I think the market clearly closed. Let's see. So for me, this was a break, right? This was the last swing low. So market finally broke the low here, right? So market broke the low here, right? That was the break of structure. Now, what did the market do? After it broke structure, this was actually the break of structure. When the market went close below this low, so the market broke structure here. So that's what we have been waiting for. This market, what the market was to break structure first before doing anything, right? So when the market broke structure here, closing below this low, now you look at this would have been your entry. This was the last up candle, right? This last up candle did what? It took our liquidity. So this candle was took our liquidity. So the market was this last up candle was took our liquidity. That was to make it low. So it took our liquidity and then broke down. You can see that there was so many imbalances inside it. So that would have been your entry, right? So this other block would have been your entry. This other block here, that would have been your entry, right? That's a sell entry, right? Let's see, sell position there, stop loss above the high, and then what would that have been? Now let's see. There was actually an opposing trend line. Now, based on what I can see opposing trend line here. I can see first touch here, second touch, right? Second touch, and then what happened? It would have been a beautiful target for you. So for me, I would have been selling to target this over. This would have been overall target, this swing low here. Overall target that low here, this low here. Right, that swing low down there. So, so let's see if I can bring it lower here. So you can see this would have been a very beautiful sell, and targeting this low. and price kind of came close to that low, right? Blasted this liquidity area, and look what happened there again. Look at this, another what trend line. So I had another trend line for me here. Can you see another trend line there? Market was still went above it. Why did it go? It wanted to do what? To hit this imbalance. So there's an imbalance inside there. Which price was to go and hit? It hit this imbalance, and then what? Went for that low, right? So we do so also if you look inside here, maybe we have not seen an end. Let's go to the 2 minutes time frame and see there was actually an end. Let's go to the 3 minutes and see there was any entry inside there, inside that imbalance region. Let's see there was any entry inside that 3 minutes area. All right, let's look carefully. There was an entry there. If that wasn't, then we west, right? We rest west. There was an entry there. All right, so let's see there's an entry inside that imbalance inside there. Right. So looking at the price, okay, I see something there. I can see it. So look at this. Market did what? Gave this swing low and then this swing high. So market actually broke touch around there. When price closed below um this low or went below this low, that was actually a break of structure. Right. So we had swing high, swing low. Look at the structure of the market here. Look carefully. We had what? Our high, our low, our high, our low, and then our high. The market was broke below. So kind of give a very fast retest and then a dump. So that would have been your entry on this, right? That would have also been your entry on this. Maybe the low of this candle. If maybe check it 2 minutes, it will be cleared out in 2 minutes or something. But those are just the entry for you. You must quickly breeze by replay to and bring price back all the way. All right, let's go to the 1 minute time frame. Let's see if it's clear on 1 minute. All right, so where was I? Oh, where am I? This is about 3 minutes. So I've forgotten where I was on this chart. It was not, I think it was in the imbalance area. Sorry. Doesn't mean let me find where I was. I don't know why the market has. Okay, let's play it a bit. I think we have. Sorry. This on 30th of August. I think price has left where we were. So let's quickly look for where I was. I don't know why the market left where I was. All right, let's just take this off. Let me just get back where we were. Sorry. All right, so let's use a 2 minutes time frame. So right, the 1 minute did not allow me to do that. All right, so let's see. All right, so you can see it on the 2 minutes time frame, right? So let's look at the 2 minutes very carefully. You can see. All right, so you can see that low. All right, so this was the high, the low. So you can see that price was it's clearly was close above the low here. So that's what price close above. So we had that's high, that's low, that's high, right? Then that's low. Had the high, the low, the high, the low, and then the high. I said price closed below. It was very fast one, right? Very quick. So you see this imbalance here. So price hits the imbalance there, and that was the entry, right? Those are that 2 minutes imbalance. That was the entry. So very beautiful. All right. So I hope this video was insightful. I want you guys to really back test on this. All right, really back test on this. It's going to really make you very good in trading, right? So that is it. So if you want to join our paid group where we discuss these things in more details, do how to join the paid mentorship group with a link in the description, right? There's a 15% discount if you use the discount code Elektron. All right, so just use the link in the description to join if you want to be part of all that. So I hope this video was insightful. I wish you the best of your trading. Have a wonderful weekend.